It's Friday, May 8th, and this is, of course, the video log. It takes 30,000 to a million. I want to show you the account, and I want to talk about my thoughts about the markets and future expectations and what I think is happening out here. It's going to be brief, hopefully, and I can get my thoughts across, and you can go about your day. So here is the video log. The account. I'm sitting at $79,100 or so. The big contributors to today's gains were or are currently contributing. Apple basically is up $387, as well as the options another $230. We talked about Delta not too long ago, so I want to look at this Apple option and show you what's happening as the price of Apple has gone up. Oh, don't tell me it's gonna lag again. Well, anyways, spoiler alert, the Delta's gone up. So the Delta is about 0.6 or a little bit over, and you should know what Delta means by now, because you've watched a few of these videos and you know what Delta means on the option. 0.6 Delta means that if Apple goes up 1,000, that the option will go up 600. That's what that means. Okay, so moving on. RSX, that's the Russian market, plus 94. Few losers here. Wheat and precious metals taking a little bit off. It's huge gains in the last few months, and the gains are huge. Hopefully the browser shows. Look at this 1 week, 5%. Wheat and precious metals over the last month, 38%. Look at the 3 months, 51%. If you look at 3-month chart of the S&P, it's down like 13%. This is up 51%. So had you had all your money in wheat and precious metals over the last 3 months, you'd be a huge winner right now. Huge winner. Look at these earnings. Anyways, moving on from wheat and precious metals, I do want to show you something cool about the precious metal stocks. DM, let's see, Cameco is moving up again. It's near $11 now. I've already sold all my options, although I have sold a $10 call as well on expiring on December, so I should have at least 100 shares of Cameco. Uranium pretty much holding steady. I want to show you this, alright? NEM, Newmont Mining. Now, I've sold quite a bit of the stock, and I still have a little bit in a different account. Only have 2 shares here, but I kept these 2 shares because I knew that I was buying at the very bottom. So I wanted to show you, look at this average cost, 16.21. I bought a bunch of shares in the dip late 2015, and I knew that was going to be the bottom for precious metals. So I just bought big, averaged down to 21. I had some shares in it, then averaged down at the bottom, and then I sold almost all of it, except I kept these 2 shares so I can see how far it's gone. And look at this, 300%, a return of 300%. Now this is the biggest gain percentage-wise that I've had on a single stock. Even though it's just 2 shares, it's just kind of fun to point out. I don't think I've ever had a bigger percentage gain before I sell. So I sold most of this stuff just when it went up 30 or so percent. I didn't actually wait for the 300. But anyways, moving on. So that's a little fun fact here. You saw the little plus 300%. Furthermore, I have Energy Transfer, pre-sold all these shares as well. But the movement up in price is fine. I'm okay with them selling at $7, $8, $9, $10. Right now, Energy Transfer is sitting at 7.63. My average cost is $9, and I've sold a bunch of options. I have 2 at 10, then a 7 and a 7. So I'm getting rid of Energy Transfer slowly. Who knows? I might get back in at some point, but I've already made some profit, so that's all right. Or I'm going to be making some profit if it reaches up to 10. If not, I'll keep my shares. And I'm lighting the position up, lightening, making it lighter. SBRA's got a good boost up, which is great. I've pre-sold Sabra, how do you say it? Healthcare REIT. I pre-sold at $15. Right now it's at $12.40. My average cost is $15.40, so I'll be coming up ahead a little bit if it reaches back 15 by the 15th of May. But if it doesn't, then I'll just get to keep my shares and sell some more call options. It's going to be great. Now, the 15 is actually a really big number because I have so many options expiring on the 15th. This one's going to expire worthless. These ones are going to expire. This one's going to expire worthless. The NYMT, the O is going to expire worthless. The OIL is non-existent. The UUUU is going to expire worthless. This O is going to expire worthless. This chemical one will probably execute, so have $1,500 there. This one, the Norwegian cruise liner, is going to expire worthless. This chemical call is going to sell 2 of them, so that's another $2,000. I'm going to be taking off of the margins that I have, so my margin is going to be even lower when that executes on the 15th. If of course chemical, excuse me. If of course chemical stays, what's going on here? Oh, by the way, you see that paper towel back there behind my left ear? That's flexing right there. That's a status symbol nowadays. All right, I got a roll of paper towels. Oh, look at this. I'm 79,300. Okay, so where was I at? The SBRA ones, 2 of them will sell. Well, I'm sorry, will expire worthless. EWU will probably expire worthless. The EXK call will expire worthless. All of these options are expiring on the 15th. That means I'll be able to re-roll. So that was probably around, I want to say, like a few $100 worth of options premium that's going to expire. And I get to keep that, right? So it's great. I love it. I'm back to selling options. It feels good. And then a bunch more will expire in the next month, in June. So, what is going on here with this market? Why is it going so high? 79,352. Well, obviously it's all this money in people's accounts. So, a few things I have, a few comments that I have here I want to talk about. One is a lot of people are saying, well, people in the news media anyways, are saying that many low-income earners are getting more money from unemployment than are making currently. Now, personally, I haven't seen any of this unemployment money. I'm unemployed right now due to this pandemic. And I filed for unemployment maybe a month and a half ago. So I haven't seen any money yet. They're saying that they're going to send me at least $167 per week or something like that, at least, plus maybe whatever bonus that California put in. I'm not really entirely sure. I've signed up a few times because the system, I guess, was kind of outdated, so I got prompted to sign up again. So, but all this money, I think people are just going to spend on iPhones, right? I mean, they get a good chunk of cash. They've been living pretty frugally for the last few weeks, and now they get this infusion of cash. I mean, they can't get tattoos or any other big ticket items, so they'll just get an iPhone. All right. Whenever many low income earners get a bulk of cash, they like to spend it on things they wish they could afford, and now they can, like an expensive iPhone. So I think Apple is going to do just fine in this period. And not only Apple, but I think, because the biggest market cap companies are all internet companies, they're all, technology companies that don't require face-to-face, in-person interaction, like Amazon, Microsoft, Apple. They're all basically the tools for people to live their lives while social distancing. I mean, this is just an acceleration of a trend that's already been in place. Right? People staying at home, ordering everything in, and just being lazy. And I'm not saying be lazy, but certainly some people, like me, just ordering everything in and just buying everything on Amazon and playing on their iPhone all day and getting subscription services and watching Netflix. And I mean, that's life, right? That's the non face to face life. And this trend is just being suddenly accelerated. So all these companies like, Netflix, Amazon, Microsoft, Apple, that make this kind of lifestyle possible are just going to, get even a big boost from this. These stocks should never even gone down. I mean, they get freshly minted cash to all their customers. So, I mean, their earnings are probably actually going to go up. The rest of the stocks, though, I don't know. Obviously, like some healthcare companies are doing well, and Johnson and Johnson and all this stuff. But I think there's going to be a big, acceleration in the bifurcation of the economy here. That's a complex word. So basically, a little split. So the old school companies and the new school companies basically, taking different paths. Now that's been obvious for, many years now, at least 9 years, maybe 8, 9 years. However, I think this is just a catalyst for the acceleration. Whether things will revert back to quote unquote normal or what we perceive as normal, I don't know. But I'm not that surprised by the boost in the stock market. Now, if you've watched some other video logs, then you'll know that I'm pretty bearish on the economy because people aren't going to be able to go to the movie theater or to sporting events or to concerts or any of that stuff anytime soon. They're not going to be going to restaurants, even though the restrictions are going to be lifted off. They're still going to be very careful. No one's going to enjoy it. They're still going to be tight and conservative and, just spend money online. But just because I'm bearish on the economy and I think that the market should be going down, I'm not positioned that way, right? I'm not positioned because of all the paychecks that have been sent out. All the money that the regular person is receiving, they're just directly spending, most of them anyways, are spending it into the baskets, the pool of cash that these cash generating siphoning machines have created. And by these machines, I mean the Apples, Googles, Amazons of the world, right? They're just siphoning cash from everyone. And just now that everyone has more cash just for discretionary spending, and they're not spending it on things like vacations, cruises, movie theaters, or anything like that, they're spending it on these machines. All right? So, and these machines just happen to have the largest market capitalization of the US stock market. So it's only natural that the valuation of the stock market goes up. Now, is there going to be another big drop down? I'm sure at some point we're going to have one. I don't know if we're going to be going back down to those levels that we saw in, when was it, March? I forget where the lows were. But it still might be a really big correction, but I don't know, with all this money infusion, I can't see the lows being rebroken. I can't see Dow going below 18,000 ever. So that's my prediction, and I'm certainly positioned pretty bullish, although now, I've been deleveraging for the longest time ever. So I've deleveraged quite a bit. In fact, let me show you how much I've deleveraged. If I go to the account, I'm gonna have almost no margin pretty soon if Cameco stays up and it goes to $11 by the 15th. I'm gonna have pretty much, I'm gonna have like 10k or less than 10k in margin. Right now it's only 13k, 14.46%. Total market value is higher than ever, 92.7 thousand. Can I say that? Can I use 0.7 when I talk to thousands? So 92,730. It's the highest market value I've ever had on this account, even though the margins decreased. So I'm able to maintain market value while getting rid of margin, which is great because of these upward moving prices. Now, I gotta discover what made this $300 jump. Is it Apple? I saw a little uptick there. It could be Apple, let's see. Yeah, Apple upticked. 307 to 309, but now it's surrendering some of those gains. And of course I have the option as well, so that went up. Oh yeah, I can show you the delta now maybe. If this loads, yep. Okay, the Greek 60, you can't see it, but it's 0.602 at the moment is the delta. Alright, so those are my thoughts on the market. And we're surrendering some of those gains. These are just some of my thoughts on the market here. I'm still deleveraging. Obviously, this is a little bit of a hype train. You know, there's positive news on the virus. It's slowing down in a lot of places. They're also figuring out some kind of medication. There's going to be a vaccine in a year or something. So people are starting to price in some optimism, and there are other factors. You know, things are restarting. So we'll see if there's a second wave. They might shut things down again, but that's what we're seeing right now in the markets. And with all this money flowing around, I can't see the second correction being deeper. But who knows? Could be wrong. I was definitely wrong before, especially on the severity of the downturn. I didn't think that we'd lose more valuation than we did during World War II in the markets. But I guess we are coming from a higher level, so there's a lot more air that can come out of the markets. So I went in too heavy too early, and I've had to actually cut my losses, and so I've had real losses, not just things that can bounce back up, but like, you know, I would sell a put for $10,000 and have to buy it back for $8,000, and that's happened a few times. So I've actually lost a lot of money. So you can lose a lot of money because my leverage was going way too high, right? I was like 40,000 leverage and my account was like 45, so I had to start cutting losses. I didn't have really, I mean, I could have held on a little bit longer, but I wanted to be able to sleep at night, so I had to cut my losses at some points, and luckily I was able to keep enough money, keep enough investments for this rebound to repair my account. And so my account is virtually repaired. I mean, I started this downturn at around 86,000, and I'm only $5,000 off of my highs. I'm at 79, so $5,000, and I'm back up to where I was before. Well, let's take a look at a chart actually. Why not? So here's the weekly gains, 5%. The monthly gains, 19, and here's the 3-month. I'm only down 9%. Well, I guess. Oh, because I put money in. I put $4,000 in back then because I had some. Now I have no money. So technically I'm off $8,000, not $5,000. Okay, sorry about that. So I need $8,000 to come to my previous highs, or a little bit more actually. It looks like I topped out at 90,000, 79, 200. So a little bit over 11. I mean, a little bit over $10,000. There you go. $10,000, I'm back to normal. This is the year chart if you're interested. 5%. And this is the all-time chart. This is what it looks like. I went real heavy here. After I saw this downtick, I went boom. Right? You can see it from 89 to 84. I lost $5,000. I'm like, okay, that's it. Correction's over. Boom. No, it's not. Surprise. All the way down to 48,000. I think my lowest was 47 or 43 or something like that. Let me see if I can zoom in and find a lower low. Yeah, I think it went all the way to 43, maybe 47 was the lowest. So there you go. Interesting times. This all-time chart looks crazy, doesn't it? It's all gonna make sense in the end, I promise. It's gonna make sense. If you zoom it out, I was actually negative here at 1.2, although it doesn't show. Oh yeah, it does show, minus 1.52%. So So this account went negative. I started taking it seriously around August 28th, somewhere around here. And so I had a big dip. This is my big gain from there in 2018. And then steady climb through 2019. And this is the fiasco here. The virus pandemic fiasco. Very interesting chart. Okay, that's enough babbling on. Today wasn't very informative, just more like an update and some of my thoughts on the markets and cash in general, and also the acceleration of the bifurcation. So if you sat through all this boring talk, let me know that you did by typing, what should you type in the comment section? Return, because my account has almost returned to normal. So type in the comments the word return if you managed to listen through all this. Alright, I'll probably make another video on Monday. Peace out.